and welcome to the program. Thank you all for joining us this Monday afternoon. I hope you had a fantastic weekend. This is the Money Show coming to you live from the nation's capital, Abuja. I am Nancy. Thank you all for joining us again today. Our theme will be looking at Nigeria's economic issues, a lot of challenges ahead. Tope Fasua, the Chief Executive Officer at Global Analytics, will be joining me in a short while. I'll try as much as possible to dissect a lot of issues. The Monetary Policy Committee meeting will go on today, that is if it's not currently going on. But Sanusi Lamido Sanusi will brief the press tomorrow, I guess so. Just also last week, I told you that preceding the meeting, we'll get inflation figures from the National Bureau of Statistics. That came up through last week, and the NBS, which is the statistical agency in the country, said that the Nigerian economy grew 6.5% in the first quarter of this year, helped by growth in the non-oil sector, as well as giving us inflation figures of what we call the CPI. The CPI is the Consumer Price Index, which measures inflation. It rose to 9.1% in April from 8.6% in March. From January this year, we've seen inflation trading at a single digit. I think the inflation rate for January was about 9%, in February 9.5%, in March 8.6%. Then in April, the NBS has told us that it's at 9.1%. I'm beginning to imagine that perhaps these inflation figures would also dovetail into what the MPC will come up with tomorrow, talking about interest rates that has been at 12% for more than a year right now. Some analysts are saying perhaps the MPC will just leave the MPR at 12%, or they will just cut it 25 basis points off. But let's see how that will play out tomorrow. But still looking at the economic figures, talking about how the economy grew, we've seen economic growth slow, 6.56% in the first quarter of this year, from about 6.99% growth of the Q4 of 2012. However, the oil sector contributed about 14.75% to the real GDP in the period under review, compared to 15.8% in the corresponding quarter of 2012 and 12.5% in the Q4 of last year. The National Bureau of Statistics also put the daily average crude oil production at 2.29 barrels per day in the first quarter of this year, compared to 2.35 million barrels per day in the corresponding quarter of the previous year. It said that the output in the oil sector had decreased in the first quarter of this year relative to the corresponding quarter due to disruptions as a result of pipeline vandalism or bunkering declared by AGIP during the period under review. All right, moving ahead, what do I have next for you? Facts, of course, that we got at the weekend indicated that the federal government has recovered over 100 billion naira on remitted taxes due to the ongoing investigation initiated by the House of Reps on commercial banks tax accrued to the federal government. We'll continue to watch all this situation closely and definitely bring you up to speed when we get enough information on that. All right, let's quickly move ahead to the numbers. Of course, when you tune into this program, you don't just get to hear the numbers or get to see the numbers. We give you facts behind the figures. We'll definitely start from home, where the Nigerian Stock Exchange will be closed in about perhaps in 5 minutes from now. But the Nigerian Stock Exchange has been on an upside for the past few weeks, or since the year started. I must say the year-to-date performance stands at over 25% right now. The market gained about 2% last week. Now moving over to the Accra Bourse, the market in Ghana is flattish today at about 1,842.96. The Nairobi Securities Exchange up by 0.5%. In South Africa, mining workers are seeking for a 60% increase in their wages, and mining stocks are taking a hit today. The South African market, just before I came into the studio, trading down nearly 1% at 41,047.42. The domestic index down 11 points, while that's domestic index in Botswana, while Semdex in Mauritius is trading down 9 points. EGX 30, 0.25% in the red. Moving over to the U.S., where stock indices are pointing to a lower open today. The New York Stock Exchange will be open in a few minutes' time and the index futures are pointing to a lower open on ongoing concerns that the Fed may begin to tamper off its quantitative easing program. Dow Jones Industrial Average, Nasdaq, as well as S&P 500 were all in the green last week, Friday. Now moving over to Europe, where the markets are mixed after briefly touching five-year high, mirroring gains in Asia. In Germany as well as France today, volume was light in both markets due to the Whit Monday holiday, though both markets are open for business, with markets closed in Austria, Denmark, Norway, as well as Switzerland. The FTSE 100 in London is trading down 1 point at about 6,722.75, while Spain's IBEX 35 is down 34 points. In Asia, the Nikkei 225 witnessed the 5.5-year high on optimistic economic outlook feeling the rally. The Nikkei 225 finished at 15,360.81, while Hong Kong's Hang Seng closed 3-month high at 23,493. Shanghai Composite of China down 31 points at 20,200 points, while in Seoul, rising tensions on the Korean peninsula over the weekend added some pressure to Seoul's benchmarks index. In Australia, the index finished above 5,200. Persistent weakness in the Australian dollar boosted stocks with significant exposure to the U.S. market. Now, coming to commodities, oil fell towards $104 a barrel today on ample supplies, a weaker demand for fuel, and a stronger dollar despite strong equity markets. The Brent crude is trading for $103.98 a barrel. Of course, a strong dollar tends to depress oil and other commodities that are priced in the U.S. currency on international markets. Light sweet is trading for $95.39, while Bonnet Light is trading for $105.50 a barrel. Gold witnesses longest slide in 4 years, weighed by speculation that the U.S. Fed might rein in its economic stimulus program, and other precious metals that we do watch closely, such as silver and platinum, are also down. Now moving over to Naira rates this afternoon. What's the Naira trading against the basket of major currencies that we track for you on the program? The Naira against the dollar is at 160. That's if you are getting at the parallel market, you should be buying $1 for 160 Naira. Against the pound is going for 248, and against the euro is going for 210. Nigeria's external reserves as at 16th of May stood at $48.4 billion. The Central Bank of Nigeria sold about $207.6 million at the WDAS last Wednesday. Moving over to international currencies, the dollar against the euro is sitting at 128. The dollar against the pound is trading for 152, and the dollar against the yen is depreciating, trading for 102.55. Let's quickly take a break, and when we come back, the program continues. We'll be looking at Nigeria's economy, the intricacies and the issues. We started last week, but a whole lot to talk about. Inflation numbers, MPC meeting today and tomorrow, exchange rates, interest rates. And I shouldn't also forget to tell you that the Chief Executive Officer of the Nigeria Sovereign Investment Authority, that is the NSIA, Uche Oji, briefed the financial press this morning at about 11 a.m. in their office. I was briefly there. We'll be giving you more details, of course, in the programs ahead, but I think that is his first exclusive chat with the press. Work is about to go on. I'm also aware that investment would be in the second quarter of 2013. Anyway, we'll keep our fingers crossed, as they say. Let's quickly take a break, and when we come back, the program continues. Please stick around. We'll be right back. Welcome back. In case you're just joining us, it's the Monday edition of your number one financial newsroom in the country. I am Nancy Lu, and joining me right now is my guest. He is Tope Fasua, the Managing Director at Global Analytics. He's a regular analyst here on the show. Good afternoon, Mr. Fasua.
Good afternoon, Nancy.
Good to see you.
Yeah, same here.
Quite a while. Let's quickly talk about, of course, I said at the beginning of the program, economic issues. You know, I think I started this last week. And I've talked to two analysts here on the program. I did first with Dr. Owo Godwin, then I also talked with Johnson Chuku, the Managing Director of Carry Asset Management. So this is the third in the series, as it were, because there are a lot of economic issues just punching me in the face, you know, and I really just have to look at them. So I think we'll just get started, first of all, by asking you, I did say at the beginning of the show, the MPC meeting starts today and ends tomorrow. It's a two-day policy meeting where we'll definitely see Sanusi and other members of the monetary policy meeting to decide on interest rates, which is key, and also other rates, the liquidity ratio, the CRR, also to review the domestic economic environment, review the external developments, and also tie everything in, talking about Nigeria's economy sustenance. So we expect to get review tomorrow, the results of the meeting tomorrow. But as an industry watcher, what is actually your take? This is a ritual that is done probably once in a quarter or so, if I'm not mistaken. What actually is your view?
Well, thank you very much for the question. Basically, I've always said that, you know, in my own view, the monetary aspect of things is not the key issue with Nigeria. Most of our problems are actually on the fiscal side, and that is, I mean, is much talked about these days. So, like most people are saying about the MPR, well, they believe, a lot of people believe that the MPR will not change. Some are saying, okay, maybe at best minus 25 basis points, 0.25 or thereabouts. You know, when I looked at it myself, I realized that the reason for the central bank keeping the MPR at 12% plus or minus 2, you know, most of the reasons are still there. You know, of course, when you increase interest rates in that, or you give an indicative interest rate in that manner, which is what the MPR is, something for the banks to benchmark. And it's that high. What you're trying to do is to reduce inflation. Of course, the central bank, through the pronouncements of the MBS, there's the Bureau for Statistics, have been able to bring inflation down to about 8%. Then it went up slightly to about 9% recently. So we're talking single digit here, which is not too bad. But then again, when you have within 2 quarters, if you achieve single-digit inflation, do you then release the valve so that the inflation can fly off again? So, you know, the central bank may be looking at sustaining the present regime of single-digit inflation by keeping the MPR at the level where it is, or at least, or at best, you know, maybe just adjusting a little bit. So, what are the reasons for keeping, you know, interest rate at that level? When you increase interest rates, you're trying to curb inflation, which it seems as if they are, you know, achieving. Also, part of the reason is that, you know, the MPR is an indicative interest rate, but basically what it's saying, plus or minus 2, is that if the banks are taking money to central bank, what they get for saving money in central bank or investing money is 10%, which is minus 2, 12 minus 2. And if they want to borrow money from the central bank, they get 14%. They're charged, the central bank charges them 14%. So part of the reason for keeping interest of the MPR at that level is also to be punitive to banks, to discourage them coming to borrow money from the central bank. And of course, it's a fallout from the recent regime where we had a lot of banks leaning heavily on the central bank.
If the CBN discourages the banks from borrowing money, isn't the CBN shooting itself on the foot? Because perhaps the CBN will make money.
Yeah, but you don't want, you want the banks to, that what they call liquidity. You see, the fallout of the recent global financial crisis, 2007 to 2009, and part of the reverberations we're still seeing, the aftershocks even up till now, was that the existing regulation did not take care of liquidity risk and the fallout of liquidity risk in banks. okay, any central bank in the world wants, or any regulator in the world wants, are banks that are liquid and sustainable, that are sustaining themselves. Not banks that will rush to the central bank or to the regulator, whoever the regulator is, whether you're talking about the Fed or you're talking about
the ECB.
ECB or what have you. Okay, every time when a bank leans so heavily and always rushes to the regulator, the bank is already in trouble. Okay, so the central bank does not want to, it's not to make money from banks which are in distress, but to ensure that the banks are able to sustain themselves. So that's really the goal of central bank. So clearly the central bank does not want banks to rush to them. I think another reason for that may be also that when interest rate is that high, okay, the MPR is that high, for example, the indicative interest rates in the country are fairly high. And what it means is that investment in financial market is encouraged. For example, now you know what's going on with the bond market, that a lot of foreigners are in our bond market. I mean, this is the only place in the world where you could get this kind of, interest rates in the shortest possible time. And they look at it and say, oh, the country has some good reserves to back up this investment, so why not if not? So when interest rate is that high, people are encouraged to come in and invest in the financial market. So I think that the central bank may also still be, whereas we're a bit wary now about the participation of foreigners in the financial markets, but you don't also want to chase them away suddenly. You get, so you cannot just crash MPR overnight and precipitate a run on your financial market like happened in 2008 where the stock market also crashed, So because the same kind of investors are investing in the stock market and the bond market for now. So most of the reasons for the central bank keeping MPR at that level are still existing. So give or take, one would expect them to maintain the regime.
How would you rate perhaps the MPC decision, because you are actually saying the MPC should leave rate at 12% because those conditions are still there?
Yeah, most of them are still there. Of course, the downside, which you would hear a lot of manufacturers complain about, is that, of course, when interest rates are that high,
lending rates
then lending rates are high. But however, you see, it brings up an issue. Many times when you talk to bankers, I was one, but when you talk to bankers, they complain to you about, we're talking about how do they reduce operational expenses, and then of course many of times they complain about energy and all that. Energy is a non-issue as far as I'm concerned.
Why is it a non-issue?
For banks, with the kind of, of course you've been seeing the results of banks recently. When you're talking about those kind of figures, you're not talking about PHCN or NEPA. NEPA or diesel is a non-issue, really and truly, but
because they're declaring huge profits, is that what you're saying?
One of the issues why the central bank has kept MPR at this level, okay, is also to narrow the spread that banks are taking between deposit and lending rates. That's part of the idea, okay? If, for example, the central bank reduced MPR to, let's say, 5%, and interest rates are meant to be at that level, it doesn't mean that banks are going to crash their rates as well. We have seen it in the past. The elasticity of the interest rate is not that high in Nigeria. The banks are keeping their interest rate at that level for some reasons, chiefly because, of course, they need to look at their expense profile, not only in terms of energy expenses, in terms of remuneration of the big boys and all that kind of things, in terms of other kind of emoluments, other kinds of benefits. And I think that it is getting to that point where they really need to look at those things. Do they need as many of those emoluments as they acquire? Of course, bankers are almost the same everywhere. But I remember that I know, as I speak to you, I know at least 2 bank MDs in the UK, the managing directors of banks. Okay, at times when they say MD, if you're working in an investment bank, they have all sort of funny nomenclatures, but these are very high up people, managing directors, presidents of banks, who don't even have any official cars at all. But in Nigeria, of course, you probably have 5 or 6 or more, so as much as we complain, of course, and a private jet. So as we complain about the public sector, fiscal irresponsibility, quote and unquote, equally it obtains in the private sector. Okay, so at some point we need to speak to ourselves that the reason why the banks are compelled to lend at those high interest rates is because of the cost structure that they bear more importantly, because of the emoluments and, you know, the kind of benefits.
Is it because of the
that
cost
banks-
structure really that they...
That's it,
that,
because you have to pass
or
on
perhaps the
you have to
risk
pass on
in the environment,
well, no,
environmental
no,
risk. Yes, environmental risk.
Of course, that's an argument, you know, but of course, whatever cost structure you bear, in order to make profit, you have to pass it on to the end user. That's the issue, okay? So, of course, you are pricing your assets according to the risk. You say, okay, well, if I lend money to Nancy, she's a good risk, so I'm going to take X amount of X interest rate. If I lend money to Tope, it's a bad risk, I'm going to jack it up. And of course, you see that the CBN usually asks them to give the risk-based analysis of why they are charging whatever interest rate that they're charging on the average. So, but that's, for me, the issue is not the risk. The point, or even if we were to look at the risk, we have seen a scenario whereby they have charged high interest rate because of the inherent high risk in the environment, okay? But consistently, they have posted good results. So what does that mean? That risk actually does not exist because the interest rate dovetails into profitability, and we're not talking about losses here. Okay, so of course, there are many other ways to mitigate your risks, okay? Not just by increasing interest. In fact, increasing interest rate creates what they call a moral hazard, because by increasing interest rates on the bad risks, you're actually jeopardizing that credit from coming back. In which case, I mean that if you say someone is a bad risk and then you slam in 50% per annum, we are killing the business. You are killing the person, okay, by dint of the interest rates that you're charging. So you can actually be the one as a bank precipitating loan loss, okay, as a result of your policy.
Now let's take a look at the subject of inflation. You know, in the last 4 months now, of course, the MBS has released inflation figures from January to April, and it's within the band of 9 to 9.5%, but perhaps a drop of 8.6% in March, then 9.1% in April. The Central Bank of Nigeria, since I have known them, have been on this story that would like a single-digit interest rate, would do everything to bring it down. Perhaps I should think that the governor of the central bank now, Sanusi Lamido Sanusi, maybe smiling, but not a wide smile, that, okay, CBN is fighting or taming inflation, not fighting now, perhaps taming inflation. How do you think that the subject of inflation will also play out? I did hear you. I heard you exactly what you said, that the risk still remains, so perhaps the MPC should be there. But if you're looking at historically now, January to April, we've done quite well, 8.6%. Our peers, perhaps Ghana, our neighbor, 15% inflation. I guess I can't remember what the prime rate is, perhaps 22% or so. But where does the CBN stand with this?
Well, you know, like I said before, the CBN is not merely going to, okay, fine, let me put it this way. Let's look at the sensitivity of the economy and other economic indices to to interest rate in Nigeria. Otherwise speaking, if you increase interest rates, you are trying to bring down inflation, right? Now, but it has other implications. The increased interest rate bring down inflation because people go less to the banks to borrow money for all sorts of ventures. If you reduce interest rate, people go more to the bank and borrow money for all sorts of ventures. But then again, it has impact on saving. You increase interest rate, people save more, people invest more in fixed deposit accounts and so on.
Because they will get more money.
If you also increase interest rate, exactly. So mind you, we're increasing interest rate, we're reducing inflation, but the other side effects are you're also increasing saving, you're increasing saving in the economy. You're also increasing the propensity for foreigners to come and invest in the bond market, and of course in the capital, in the financial markets in general. You understand? At times, you could also attract the attention of foreign investors into your financial markets in general. In which case, people can come in with a portfolio and put some on stock market and some on bond market, because your interest rate is higher. They believe that they can take the risk, and they're looking at your foreign reserves and say, "Oh, you have enough money to back this up."
Perhaps to buttress this your point,
yes.
I read something last week that foreign investors have made about $2.7 billion from the Nigerian economy within a short time.
You probably say, why not, if not, you know, is there risk, right? They've been here, of course, we're a bit wary and say, okay, look, we don't want to suffer like we did, you know, in the first, in 2008, 2009, thereabouts, when the market crashed. We don't want that to happen again. So a lot of people are, where even I've heard the central bank governor express opinion in this instance, in this regard. But of course, you don't also want them to move at the same time. So, and then again, if they are going to or maybe also a strategy to look at is that what if we consistently manage our economy well, okay? Will these people then have a long-term view? And a long-term view being several short terms. So if these guys are thinking, okay, let's rebalance our books every end of year, every 12 months they are rebalancing their books as the case may be, can they roll over their investments? And before you know it, will they have been here for 10 years or 20 years while we also build up local capacity, okay, in the financial market? Because I always say, for example, talking about the Nigeria stock market, that it is called Nigeria Stock Exchange for a reason, because it should be built by Nigerians. You know, the key money that should be there should be Nigerian money. The base of that market, you know, the bottom of that market, which fell off before, was Nigerian money. Those are parents buying, you know, shares in those days and say, look, I'm buying it for when Nancy is 35 years old or 40 years old and all that kind of thing, which is what disappeared in the market, and that's why the bottom fell off. Now, if we are able to maintain good economic policies, pending when that bottom will come back into the market, so that it will not matter if those guys are exiting that much, you know, in the future. So that's a very critical you know, reason. So if we're able to maintain inflation, for example, at single digit, what does it mean? Very critically, if you brought in money to invest in Nigerian bond market, for example, in a year, and you are getting 10%, clearly, apart from your, you know, let's say your exchange risk, or, you know, the risk that by the time you're taking your money out, the money has fallen vis-a-vis the local currency, the clear and critical consideration is inflation. So if you're bringing in money and you're getting 10%, you have to back off inflation to know whether you're making money at all. Okay? So in this instance now, if people are making, there are some bonds that are trading at 13%, 14%, and all those kind of things. I'm talking about the coupon now. You know, if you're able to net off 8%, then they're still good. Okay, so I think the challenge for the central bank is to see how they can maintain that inflation at that level, that if they are going to reduce the monetary policy rate, that it should be gradual, very, very gradual. And 3, that they should use more moral suasion on the banks to bring down their operational, you know, operational cost very, very critically. Moral suasion is good. Of course, bankers will tell you, for example, even abroad, remember that even in America, even as they were using taxpayers' money to bail out the banks, the banks are talking about bonuses.
Yes, exactly.
You know,
the chief execs were saying we need our bonuses.
Banks are the same. You wonder what people do with such money. You know, people like Dick Fold of Lehman Brothers cashing out $500 million within 8 years and still saying he was the victim. Everybody would like to be that kind of victim, you know, with $500 million in the bank.
Account.
You know, so whether in US or UK or here, it's the same. In fact, I'll probably say that we've managed things better in Nigeria because the personal liability that the central bank was able to draw from those bankers that erred, okay, in 2008, 2009, they were not able to do that in the US or the UK. However, we need to also point out that ours is a much poorer environment. We have some peculiar challenges that they don't have in the UK and the US. The poverty level is higher. The unemployment level is higher. I was in Lagos last week, I think, and you could see the buzz in Lagos if you are around VI or Ikoyi and all that. You could see the development. In fact, remember that like in Dubai in 2006, 2007, before the crash, okay, 65% of all the cranes in the world were in Dubai. 65% of all the cranes in the world were in Dubai.
Because they're building.
As at then, you know, and of course the crash came. When you go to Lagos these days, you see the buzz, you see the cranes, okay, at least in some parts of Lagos, you see the initiative, the metro line is coming up, you know, everything that's here. But at the same time, you will see the desperation because no one is just taking care of the huge population. And the population keeps burgeoning and no one actually really bothers about it, you know, but then it increases desperation, then crime goes up, then we're talking about kidnapping, we're talking about all sorts of things. So one could look at Lagos from a perspective and say, oh, the financial markets are doing fantastically well, the highbrow areas are being refurbished and remodeled and all those kind of things. New hotels are coming up, everywhere is looking splendid. But if you just look at the backyard, so we need to think differently. I'm saying we are not America. We're never going to be America even in 10,000 years. We're going to be Nigeria, okay? So we need to think differently and we need a different kind of patriotism from our people, including our bankers as well.
I will take you on to key areas which you've raised. the area in your discussion, I listened to you and you did say strong economic policies. So I want to ask you at this time, as an industry watcher, do you think that perhaps right now we're getting it in terms of structural policies? Yeah, last week, Moody's Investor Service, which is a credit rating agency, did say that Nigeria is weakened by corruption, weak institutions too, and all of that. And that's, of course, structural economic policies are coming on board, but there are a lot of fundamental issues that are dragging us down. That is one. Do you think that we're on a sound footing right now in terms of economic policies and economic reforms? I can go on and on, perhaps in agriculture, infrastructure, and all of that. Then the other thing which you have also raised is the issue of population, because in 2011, if I'm not mistaken, yes, the National Population Commission did say that Nigeria's population has hit 167 million people. How do you think that perhaps we should begin to put the issue of population into planning, into economic planning? That is, if at all we're doing that. Do you understand what I mean? If at all we're doing that. I think as at that time, Nigeria was the sixth most populated country in the world. So are we putting the issue of population into economic planning? That's the second question. The first, economic policies.
In fact, I'll say that the two questions you have asked me, many professors will write like 10 different theses out of them. You see, because these are what they call the $160 million question. But
I should say it's too big for you to handle.
$160 billion, $1 million, which is $1 for every Nigerian. But then again, I'll give it a shot. You know, number one, in terms of structural economic policy, at this point, I would probably want to draw your attention to this research I got from one of my former bosses, Professor Susungi. You know, he's a Cameroonian, and I think he even contested for the presidency in Cameroon the last time around. I think, of course, everybody lost to Paul Biya, you know, who has been there for God knows when. But then again, he did this research on what is called the fiscal productivity, and he actually highlighted the fact that Nigeria had the lowest fiscal productivity in Africa. And what is fiscal productivity? Basically, the fiscal revenue divided by the GDP. So basically, your fiscal revenue, or just look at your revenue that the government is getting, divided by the GDP of the country. So he compared with a lot of other countries in Africa, and Nigeria was the lowest in terms of the fiscal productivity. Now, let me let you know, in thinking about this, because I'm still going to have to go back to Professor Susungi, but in thinking about it, I realized that this thing is actually talking about is that our budget is too low. Because your revenue is a function of your budget. If you had a balanced budget, revenue equals to expenditure, right? It just so happens that this time around, Nigeria is already a deficit budget, in which case we're making 3 trillion as revenue. Government is making 3 trillion as revenue and spending 4 trillion, thereabout, okay? So in which case we have to finance that deficit of about 1-point-something trillion. Which itself, for me, I don't think really we should be running deficit revenue. I think we should rethink the way money is being spent. We should rethink some of this economic policy. I don't even think we should be going into the debt market as we speak, okay? But what Professor Susungi is saying,
if we don't go into the debt market as we speak, what's the viable option?
The viable option for me, I will probably get there, but I'm talking about releasing the capabilities of this economy, not necessarily. Listen, okay, for example, I was thinking about this and said, well, the difference between thinking ourselves out of this quagmire and actually running into the global debt market to borrow is the difference between your dad, the moment you clock 16 years old, he decides to give you 10 million naira, which was a lot of money in that time, or 100 million, and say, Nancy, you don't have to go to university. You know, just keep spending. You know, in fact, I'm going to loan you, invest it in any business. You will definitely mismanage that money at that age. But you've now gone through university. And then you've gone through to the University of Hard Knocks as well, to know that life is not a bed of roses. In which case, you can go ahead and make your own 10 million or 100 million, as the case may be. Okay, but you know that you've grown into that money. So the idea behind always rushing back to the global debt market is that we stymie our own growth. So Susungi here is saying that we are not having a big enough budget, that our government is not generating enough revenue. And he actually did mention that there's a certain report that says 350,000 companies in Nigeria are not even paying taxes at all, which is what Professor Konjewela did mention as well. Now, why are they not paying taxes? They're not paying taxes because over time, number one, over time, Nigerians have seen taxes as an instrument of oppression. Over time, they've lost confidence in the different governments that have come. And over time, they have seen that as they give the money to government, that they don't like the things that government spends money on. However, that is changing as well. Nigerians are beginning to pay taxes more, much more easily. You go to Lagos, people pay taxes easily. And of course, the government won't let you rest.
As we speak today,
as we are speaking right now,
hold on, Mr. Fasua.
Okay,
just hold on. I just need to say this very quickly. Do you think that perhaps people are paying taxes because they see what the government is doing? Or they are now paying taxes because they are coerced to pay taxes, that if I don't pay my taxes, I may not get XYZ.
It's both
Do you
ways.
understand? I may not get one or two contracts from the government.
Clearly. No, it's both
I
ways.
Need to
the government has to coerce people. No, everywhere in the world, people try and evade taxes. Even in the UK, that's perhaps the most taxed country in the world, with VAT at 20%. And in fact, they're thinking of increasing it. Even in the UK, people try and evade taxes. You go to a lot of shops, they look, you give me cash, I'd rather take cash. Because once it goes through card, it has a record and they can track your sales and all those kind of things. So all over the world, people try. So it's a combination of the two. The government has to coerce people, but the government must also be fiscally responsible. Okay, now in being fiscally responsible and spending the money you get from people on the right things, okay, not on maybe buying SUVs for your operatives. As I was coming here, I saw some SUV, which was some innocuous agency. And I wonder, what does this agency do? Why would they deserve, even one person in the place deserve a car of 15 million, okay, or perhaps more than that. So you see, I know that, when the Minister of Finance came, these are some of the things she tried to. I've seen the Minister of Finance in 2005, 2006. I've seen her drive herself. During the Obasanjo era, she drives herself to work in a small green Peugeot 206 or 406.
On a weekend?
I saw her on a weekday.
Okay.
She drove herself, as at that time, I still remember. But, she's coming from a different mentality. But when you come here at some point in time after fighting so much, you have to just let it go. I think this is the way these people want their thing. Let them have it that way. So part of it is fiscal, irresponsibility, which until the government can take care of that fiscal irresponsibility to a certain extent, then you can get more taxes. Then when you get in more taxes, what Susungi is saying here is that our budget is too low. By now, except we're budgeting something like 20 trillion in a year, before our fiscal productivity can increase to the level where some of our peers are. Of course, you can look at it and say that, does this also mean that in those countries with very high fiscal productivity, maybe the government dominates a whole lot of the economy? It can be seen in that regard. But I think that it also means that in whatever people do, the government should get something back by way of taxes. And I don't see any reason why not. If someone is doing a viable business, if you make 100 million, you should be able to give maybe like 10 million back to government as taxes after taking out or at least 5 million after taking out your expenses. And you will be convenient and comfortable with whatever is left and all that. So what's the second question? So economic policy-wise, I'm saying that we are still not there. I'm saying that fiscally we're still, a working disaster. In terms of agric, of course, we've had a lot of initiatives. Okay, in fact, the issue with agric is very basic as far as I'm concerned. It's about feeding ourselves. And when I was here the last time, I did mention that I think that we need a policy to protect some of our land so that not just anybody can, we need to protect enough of our land in order to feed ourselves. And of course, in terms of infrastructure, we've seen a few initiatives recently, but I'm saying that even the minds of the people are not being built. So we can say a scenario where the government is building infrastructure and people are misusing that infrastructure. People are destroying that infrastructure, just as government is spending money on it. So there needs to be an investment in the people themselves. In terms of population and jobs, which is the other angle of the question, I think that my take on this is this, that we need a strategic policy, something that we need to sit down and tell ourselves, 160 million people, we're never going to be able to get enough jobs for these people. In fact, mind you, that unemployment, like inflation, is a necessity in society. Inflation is necessary. A certain degree of inflation is necessary to continue to spur growth, right? and to spur, you know, at least so that when people, when a company produces, you know, yeah, well, when a company produces, at least the fact that there's inflation in society means that prices are going up and they can make some margin, you know what I mean? And the competition doesn't squeeze out their profit. In the same vein, some degree of unemployment is necessary in society. If there was no unemployment, new companies will not be able to even find people to work with them. You understand? I mean, if there was no unemployment in the society, a new company today cannot get the capacity to even grow because there's no pool to pull from.
But what rate of unemployment could be
could be manageable? You know, people will think something around 5%,
like in Australia.
Yeah, thereabouts. You know, but yeah, people have to be. Some people have to be jobless. I'm sorry to say, you know, at some point in time. But that is the pool. You know, yeah, that at least the growing companies can pull from, and then it becomes so that it doesn't become the employees market. Okay, if it was the employees market, what will happen is that employees will now begin to price high. Before you can get a cleaner, he said, look, if you don't give me 200,000 per month, I'm not joining you because there are no other cleaners to choose from. So you see how that can be a danger. However, I'm saying that there needs to be a strategic policy. There needs to be a strategic policy we need to plan. And it will take us looking at our society holistically. For example, there are so many things that we can do for ourselves in this country. If you look at food production and what's it called, you know, value addition to food and all that, you know, there's so much you can do for ourselves. A lot of our crops that waste 40%, 50% each year, we can add value to them one way or the other. We can preserve them for the whole year. Okay, we can do that for ourselves. If look at, for example, there's this program that the NUC runs on AIT. That's the Nigerian Universities Commission, that has to do with what's it called, with research. You know, and the other day I was with I think the Deputy Executive Secretary, Mr. Agbawi, and I was telling him, look, this is a wonderful program. If you guys can, I wish other people can join the bandwagon and assist them. What we need are those researches at that lower level, okay, that can release the energy of the society. For example, the grinding machine that our mothers used, you know, that makes a lot of noise, it's still the same grinding machine that everybody uses today. No Nigerian engineer has thought about, look, how can we make this thing less noisy? That is what the white man will do. The white man will say, look, how can we make it less noisy and even more efficient and even cheaper? And then when they do those things, they sell it to us in Africa. Why do we always wait on the things that are sold to us? Now, since we wait for things to be sold to us, we will never be able to generate even adequate employment in order to get to where we need to get to. What we need to do is ourselves to look at each. Now, if there's anything that the white man does not think about, because he's not aware that that need exists in Africa, the Africans don't think about them themselves. You understand what I'm saying? If the white man doesn't think about it, okay, they need phones. Okay, so it's phones. We need phones. It's the white man's production, and he produces and gives us phones.
We are more
but if, for example, in the villages, women are trekking for 10 kilometers in the bush, okay, carrying wood on their backs, or yam or whatever, and nobody is thinking, okay, how can we make life easier for those people? They are grinding all sorts of things, cassava and what have you. It's so noisy to them. A lot of them are deaf. Nobody is thinking, how can we make those machines smaller? How can we make them less noisy? How can we make them cheaper? Okay, more available? We need to look at every household and say, what do these households need? That is and then those things that we can produce for ourselves. Those houses in the village, I tell people, look, you say you want to, we're talking about tourism in Africa. What is there to take any foreigner to in most of our villages? I'm talking of the real villages where they live in mud houses. You know, because we have not assisted them to build their houses properly. They don't have good foundations. The thatch roofs always leak. You know, they don't have good ventilation. And so see the way they live. Is there any Nigerian? The government has to spur this growth anyway. It has to be a blueprint. We have to look at each and every household, and there's a lot of households to go around in Nigeria. What can we do by way of planning their ventilation for them, their sewage systems, you know, their water systems, and what have you? Yeah, well, I think, in my view, I would think that the federal government, because at the end of the day, we're talking about this is a strategic initiative. It is strategy. It is absolutely strategic that the federal government will have to bring the state governments together and the private sector. But this is not about making money alone. Of course, every time we hear something, you know, you hear something like agric is all about business. Well, I think it's only halfway. You know, it's about business, but it's about strategy. Agric is about feeding our people. If you look at it from the business perspective alone, then private sector companies will be coming and thinking about making profit. And like we said about the banks before, it's not only the banks. Most companies in Nigeria think about making mega profits. Okay, you know, a lot of things are so expensive. Hotels are so expensive in Nigeria. You know, taking a taxi from one point to the other is so expensive in Nigeria. Why would you move from Lagos Airport to somewhere within Lagos for 6,000 naira, for 10,000 naira? For what, you know? Okay, you know, so there's a lot of things that we need to rethink in our society. But I'm saying that the potentials are there, and the potentials are yet unreleased. And the potentials is not about just borrowing money in order to, but borrowing money, that availability of more money to borrow actually short circuits our brains from actually the kind of leverage we should leverage our mental resources. Yes.
All right, just a few comments have come in from our viewers, and in case you want to send your comments in, please go to our Facebook page, www.facebook.com/ABC Money Show Live, and drop your comment. Lojo Pepaki is saying, Tope hit the nail on the head. We need a monetary policy that has a human face. That should be going to the central bank governor. Okay, Gideon is saying, please, as an expert in this field, prophesy the Nigerian economy by 2020. You just said expert. I didn't hear you say he's a prophet. So the Nigerian economy by 2020. But I think I should take his comment from this way.
I think they should direct that question to me, Engineer Toyin Joko Senumi of Central Bank, who's in charge of the FSS 2020.
No, but I don't think he's talking of FSS 2020. I think he's talking of Vision 2020, which I should take from this angle that the Minister of National Planning, Dr. Samsudeen Usman, I think, is it Dr. Samsudeen Usman? Yeah. You know, I think at a certain forum did say that perhaps we will not make Vision 2020 anymore. That if we make it by 2025, he will be a proud person.
Now, let me let you know this. No one can tell. Okay? No one can tell. See, in planning all over the world, okay, when you're making your model, your strategic planning model, there are a lot of things you may be able to model and account for. So in economics, when we say y is equal to alpha plus beta plus whatever, we always put something at the back, E or U, which is the error term. See, this error term in our kind of economy, that error term is very strong. Sorry, I'm taking you through your economic. But then again, that error term is very strong here. That many times in our economy when we model, all our alpha plus beta plus gamma plus lambda and all that doesn't work. What works is the error term. Now, what I'm saying is this, that it's difficult for anyone to sit down here today and say, this is where we're going to be in 2020. In fact, right now, the fight we are fighting is for those who are saying disintegrate Nigeria, not to win. I've heard all sorts of people say, there's no basis for this country. It's a rubbish country and all those kind of things. I don't see what they mean, because, in fact, I was watching a clip on YouTube the other day about the world's greatest football rivalries, and you could see within Scotland alone, this same Scotland that says he wants to break away, between the Celtic and the Rangers in Scotland, there's the enmity that exists between them. In fact, a Celtic fan does not have a Rangers friend willy-nilly, and vice versa. You know, so the people who colonized us and gave us independence, the basis of their own unity itself is faulty. So why do we Africans think that we need to have everything well prepared for us and all the conditions must be perfect, when in actual fact no condition will ever be perfect? Is it the basis of American unity that we want to look at, or the much talked about places like Australia, New Zealand, and all those kind of places? There's nowhere where so the fight we're fighting now is that those who say scatter the country should not win. Those myopic people who cannot think further than their tribe and at times their religion, that they should not win. Now, if we're able to win that fight, okay, there's a whole lot more that we can do that can happen in this country. If we could only interact together. For crying out loud, left to these people, I'm from Ondo State, you're from Delta State. We should actually not be speaking. We should not be on this platform speaking, but the world has united. The world has become globalized. And it is when you think and be able to get your own purchase in this globalized world, that's when you're going to survive. If in a globalized world, if people are thinking in 2D, two dimension, one dimensional thinking, Yet they're carrying phones that are 3D phone, 3G, 4G phone. They're watching TV that's 3-dimensional. They go to cinema.
With
But
3D glasses.
but their minds are one dimension. So you see, if we're able to come together, those who are thinking progressively, those who are thinking productively, this economy, the economy does not even exist in the first place. There's so much. And that's the upshot of this fiscal productivity thing that the professor is talking about. We're saying that we should be budgeting around 10, 15, 20 trillion every year. And the moment you begin to do that, the GDP keeps on increasing.
I think I would need to take you up on some of these issues, especially fiscal productivity, perhaps on a later date. But just as we round up, Abdul Rahuf Ali, who is saying your guest is right, our Greek is not the solution to our problems. Our policymakers need to think and think well. Many thanks, Mr. Fasua, for being on the show.
You're
Always
welcome.
Insightful anytime you're on the program.
I try my best.
Let the remaining day, part of your day be fruitful and profitable. And be productive. Let your fiscal productivity increase.
Oh, yes. I think people should talk about personal fiscal productivity.
Productivity.
No, you see, our people, like, you go and spend your money spraying in parties, and then you come back and say the economy is bad. Nigeria is the highest consumer of champagne
and I also
in
heard
the
that.
world.
I read something
And somebody was
last
criticizing Fashola, that Fashola wants to bring in a merriment tax. I said, look, except we two were not thinking as a people, it's not enough to criticize government. We even were not ready to let go of the nonsense that we do.
Okay, I think
we should be thinking about the legacy we're leaving for our children,
and the amount
rather than swigging champagne and NSC and Moe and all
I think 1 billion naira spent on parties by the Yorubas. Just pardon me, but that was
one day, you mean? Yeah. Or maybe one weekend.
That was what I read last week. I just thought I should drop it in. All right, thank you everyone for being a part of the program. I hope you did enjoy the package today, but if you did not, just take another chance with us tomorrow. You know,
you'll have another guest tomorrow. So
Mr. Fasua said, let our fiscal productivity increase. So let your fiscal productivity on your side increase. Be the change you want to see and always be the best you can be. I am Nancy Lo. See you all tomorrow. Bye for now.